All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'll hop it on to address a few things and look at the overall market here with you. But Michelle has forwarded over me a few questions that have been sent in, so I do want to take a look at some of those. One of the things that I have gotten here is or received, gotten. Yeah, my mother would kill me for that one. Have received here is questions on levels. Where does the S&P bounce? Where does the IWM bounce? Where does the Dow? Where's support here on it? And let me just go through these here with you, and I want you to see a couple things here. Number one is that levels, when there's panic, just don't quite matter, right? When there's panic, levels are recreated. So if you go and say, well, I'm going to use 200-day moving average, or I'm going to use this, I'm going to use that, you may ultimately be right. I mean, ultimately, the market bounced right here at the 200-day moving average, the Dow, right? And, bounced nicely off of that level. But is it holding that bounce? No, not at all, right? Not at all. And now it's gapping below the 200. Does the 200 matter? Is this level, this level, this level, right? When we are in a fear environment where rational thinking is not permeating the market, like today, right? Today's definitely a fear environment. It doesn't mean there's not some rationale behind things, but a lot of decisions are not being made with, the logic of it. It's being made with the fear of it. Does a level really matter right here? Is a level really key right here? And the answer is no. And what the market tends to do is it tends to create new levels in these periods. It tends to create levels that are going to be usable in the future. And right now, yes, we've talked about the S&P coming back to the lows, and it has done that. It has come back to the lows. And I don't think it makes a whole lot of sense for the market to be selling down further when it comes to the rationale, when it comes to the Fed and earnings and the global economy and all of that. When we put the data all together, it doesn't make a whole lot of sense. But it's the market. And the market doesn't always make a lot of sense. When it goes into fear mode, it sells first and asks questions later. It finds flaws in a very positive story and sells them. And that's what we're seeing. And so I can't sit here and go and buy aggressively this morning saying, there's no more risk to the downside here. Because the reality is there is. This morning I turned on CNBC a little bit, and, they were talking about the VIX, and, the VIX is under 25, so everything's okay, or, if it goes above 26, then ouch, or it's a predictor. Well, it's up 15%. What is that? That's a sign that there's some panic here this morning. Is it a sign that the panic is full-blown? No. And I think if you're a dip buyer, if you're wanting to buy the dip, you have to look at this VIX and go, I wish it were up higher. Wish the panic were a little more full-blown right here, right? Because that's where you're going to get some of your spectacular. That's where you're going to get fund managers shifting their mentality from sell to buy, right? And that's what ultimately, and we've talked about, when there is a bottom here, what we need is our fund managers shifting their mentality from sell to buy. Now, for me, and for the challenge for option trading, my shift and focus has gone completely to, all right, now when do I get a chance to buy? Through back here, it was, I'm not looking to buy this. Where can I buy some SPY puts? And I bought the SPY puts, and I missed the big day. Okay, great. But now where the market is now, my mind is completely shifted to, now where do I buy? Where do I step in and buy some of these illogical imbalances? Now, it doesn't mean I'm going out and buying right away this morning. Why? Well, because there's no price stability within any sort of range. and options are, well, ludicrous, right? So, even if I'm writing them right big, is my option going to pay off? And the chance is no, right? And so what do I need to see? Well, first I need to see some of those option values, at least come down to earth. And, second, I need a good risk-reward scenario. And buying off of today's low, for me, that just doesn't make a whole lot of sense. But that's where my mind has shifted. It's shifted from okay, sell, 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 to buy. It shifted there because of the earnings season that we see so far, and because of the economic data that still exists out there. But it doesn't mean that I don't acknowledge the fears that are out there and the concerns that are out there, and they are real. But when I go and I look at a stock like a Bank of America, and I see that they've sold it all the way down to 26, and they've sold this stock down. In fact, let me pull it up here on Y charts. My apologies for not having this up. All right, let's just pull up a fundamental chart here. And we're just going to look at the price to book. But they have sold this down to a 1.1 price to book ratio. And for a company that has more transparency than it ever has before, right? Where we're talking about revenue growth, to the upside, just continuing, right? I mean, that revenue growth is just continuing to accelerate. That's just one that's, a little too irresistible for me. Now, if I go and buy it right here, I could be right. I could make some money, right? And it could bounce. It would feel pretty nice. Not going to make a ton because the option implied volatility is, well, elevated, right? It's it's up there, right? If I come out and give myself till November and I buy the 26.5s, I'm going to pay $1 for those, and it's only 30 cents of the money. So essentially, to break even, I need this stock to rise over 3%. The implied volatility is up here over 30% on this option. This is going to fall back into the 24, 23, 22 level. And when I come in and look at the Vega here on that's 3%, or that's 3 cents, or 3% of my trade for every level. So we see this drop down 8 Vega points. That's going to be 24% of my option gone just because of Vega. Oh, another 20% because of Theta. I'm down 50% on my option if the stock just doesn't bother to move for the next 4 or 5 days, right? That's the risk factor. So yes, I can make money if I'm right and it just zooms up, but that risk factor is huge on the option. And so it's not something that I'm really interested in picking up today. Now, if I'm going to go pick up and I desperately have to get into an option, right? If I desperately have to get into the option, I'm going to look at a call spread, right? I'm going to come out to December or January, and I can offset the time decay. I can offset the majority of the implied volatility. I can come buy the December 28 call and sell the December 29 call. I can be in this for about 30 cents, 28, 30 cents. And if I'm right, it'll be worth $1. And I don't have to worry about the theta driving out of it, right? I don't have to worry about any of that. And so that's, if you're looking to bottom pick in this market where the fear element is high, that's the way to go about it right here. That or shares or selling puts. But buying just straight calls and short-term calls, yep, if you're right, you can be right in a big way and it can pay off, but you better be right. You better be right in a big way, because if there's any sort of flat, you're going to be looking and going, wait a minute, the stock isn't moving, and well, my options are, well, tanking. Okay, so that's the risk factor, here with it. But as I look at things and I look at the overall environment and I look at this market, my mindset is looking and saying, okay, now where can I step in and buy? But it's not, something where I'm going, oh, well, I'm going to buy a challenge trade on this right here, right now, because the option, boom, there. No, I don't see a ton of opportunity there. Tesla is very interesting. But, don't see a ton of opportunity there here just yet. As I do think the fear element still isn't strong enough for me to just say, hey, bottom's in and let's go. When Adobe's down 12, 13 bucks, if and when it's down 12, 13 bucks, if and when Amazon's down 100 bucks, I may change my tune a little bit. Right? If the panic gets that extreme, but right now the market's down 40 points. It's not exactly extreme panic. That is a little bit over 1%. Right? A little bit over 1%. We're not in any sort of multiple percentage type sell-off where I can look at this and say, okay, this is definitely making a bottom. Let me go and buy there. Okay. I did go buy something this morning personally. I went and bought some lows. Now, I bought a partial position, right? And this is a long-term position here. And I bought shares. Okay, I didn't mess with the option. I just bought shares. But this is a company that I've been watching for a while. We saw the activist investor jump into it here in August. Made a nice run. I missed out. I wanted in. Didn't get a chance. Started to pull on back. Okay, it's had a rough October. It's pulled all the way back to the 200-day moving average. I don't know if this is going to be the absolute bottom, but the stock has sold off 20 points. It's something that fundamentally I'm very bullish on, very positive on. I think it has positive drivers associated to it. I understand why it's pulled back. I understand the fears there, the housing fears and the Fed fears for housing and all of that. But I said, okay, you know what? This now becomes an interesting spot for me to pick up. I'll pick up a partial position. And, when I'm comfortable it's bottomed, I'll add the rest of my position and go. But I can't pick this up today and go, oh, I picked the bottom. The bottom. Yeah, great, I got it. This thing could easily be at 93 even by the end of the day. Right, so it's one of those where, yes, I'm not going to argue against, going and picking something up that you've had your eyes on, that you've wanted to be in. You just look at the price and go, I can't resist this price. Great, go for it. But going for it expecting that that's going to be the bottom, or going and buying something like a Lowe's and saying, well, I'm going to use 95.20 as a stop point, doesn't make a lot of sense. Not in a market where there's the fear element that there is, right here this morning, okay? It would be very atypical to see this gap down and then just see the market go straight up from here. That would be very atypical. It could happen. It could happen, but it would not be the norm. It definitely would not be the norm. There is some rational element in the market here today. This isn't as blind of just, hey, sell everything and be done, right? There's a little bit of rational, or differential element here. You'll notice here the NYAD, the number of stocks advancing versus declining, it's not as low as it was when the market set its low back here. There's a little bit more of differentiation out there, and we see that with things like Verizon and their earnings, and Verizon up 3% here. We see it with things like, well, I don't find McDonald's very rational to be up, but, that's my bearishness on McDonald's for the reasons that they've risen. But, we still see buyers stepping in. The one to me that says this isn't a totally 100% irrational market yet, or just totally fear-driven market just yet, is UTX. UTX earnings were great. There's not a lot of holes in them. The conference call still has to go, but the numbers themselves are very positive, and we're seeing the market reward that. Not initially, but here early on, rewarding that. And that tells me there's still not full-blown panic out there, which just tells me right now it's not the time to say, hey, you know what, I'm going to buy this dip and the bottom's in and let's go. I can buy some flyers. I can buy some snapback trade stuff. But in terms of really putting on a sizable position and feeling great about it, no, not at all. But these markets, for me, they're not about, oh, what trade do I buy today and right now and where does it go? To me, these markets, and we just haven't had many of these types of days over the last several years. But these markets historically have been, for me, markets where I sit back in my chair and I have my yellow notepad that I love, and I just start scratching down observations. And one of the observations that I scratched down is UTX, fantastic earnings. And what's that tell me going forward? That when I get a buy signal on UTX, I'm going to trust it, I'm going to take it, I'm going to go. I get a buy signal on Triple M, am I going to be as eager? I better do a little more research. It has nothing to do with the reaction, it has everything to do with the earnings. And in this market, in a day like today, there's several things that we can kind of scratch on our yellow notepads and say, okay, you know what? Going forward, these are going to be the opportunities, right? JP Morgan is going to have a bounce back and is going to trade in the 110, 115 area again. Doesn't mean I go buy it at 106 or 107 or 104. Right? Because lower is still plausible and possible. So I need those bottoming signs. And I'm not looking to pick a bottom. I'm looking for the bottoming signs. And the first thing you need, some stability. Some price stability. Are you going to get that on a day like today? Probably not. And so on a day like today, no price stability, no real... no real option value there. It's just not the day to go and bottom pick. It's not the day to go out and say, hey, you know what? I'm going to scrape this up and I'm going to scrape that up. But it is the day where it is the type of day where you're going to see some of the stocks that are worth picking up going forward, and some of the stocks that are worth picking up, as the market, the fear elements, subside a little bit. But when we have Chinese fund managers, state-backed fund managers coming out and talking about selling and selling in a big, big way, that's not going to go away in a day. That's not going to go away in an hour. It's not going to go away overnight. And it's going to take a little bit. And so, yes, we may see levels created. We may see, some ultimate levels created. But, this is just not a sell-off to buy yet. And just not a sell-off to be aggressive with and say, hey, you know what, bottom's in, let's go. There's not enough fear in it yet. There's not enough panic in it yet. Yes, it's a fear and panic-driven move, but there's not enough to say, hey, you know what, bottom's in, and let's go. Adobe has dropped $4 since I've been talking, and I mentioned earlier, yeah, when Adobe's down 12, I'll be interested, right? I'll be interested. We start getting Adobe down 12. We start getting some of these Amazons down triple digits. Now we're talking about a little bit of full-blown overboard panic. But for now, where they sit, is this move going to be anything in the long term? I mean, if you look at this move on Amazon, and then tomorrow Amazon drops down here to $16.50, today's not going to look like much of a move. Just that continuation of the bear flag down. Right? That's all it's going to look like. And that's all it's going to be. And so when you look at things, there's just no signs of bottoms here just yet, even though we are at the market lows. And as I mentioned earlier this morning, I do expect that we will see something spectacular. Something very, very spectacular if and when the market bottoms. Not if. But when the market bottoms, it will be something, pretty awesome, pretty amazing. It'll be that thing that will have everybody going, man, I wish I bought then, right? thinking, oh, well, I wish I could bottom pick. And yeah, okay, great. You know, you can go bottom pick. You can go buy the market now. You can buy it 10 points lower. You can buy it 30 points lower, 80 points lower. Eventually, you'll be right, and you'll bottom pick, and you'll feel good about that. For the rest of traders, wait until that bottom kind of comes in and be able to base things off of that and trade off of that overall. Okay. All right. So anyway, that's those are my thoughts here this morning on the market, on what we're seeing out there, and how things are trading. I cannot emphasize enough. This is not a bottom pickers market here just yet. There's not enough fear. It's fear driven, but there is not enough. It is one that needs some more fear to come into it before being able to say, hey, bottom's in, go and buy, be aggressive, and you'll be good. Okay. All right. Give me a little bit. I want to kind of watch a little bit of the market here, and we'll take a look at kind of how some of the things are setting up here. But we'll also talk about the earnings and the economics here on what those are actually doing in this market right here, and show you some of my favorite plays based on those, and the stocks that I'm just waiting for the 3 and 7 to cross over and say, hey, you know what, all aboard, choo-choo, let's go. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.